Here.
No, I'm not a writer.
Okay.
And good Monday morning. This is Mike Lodge. I am the business advisor. And I'm glad that you joined me this morning. Still dark out when I'm doing this podcast. No sun coming up at the moment. What time is it? Well, it's 5:54 in the morning. No wonder. So, it's a dark morning. I tell you, over the weekend, I just kind of relaxed, sat back, didn't really do anything, didn't go anywhere. Worked on a couple of things on my books. I have 2 more books that I'm writing. Listen, when I write books, I write very small books, very thin books. They might be 30, maybe 40 chapters in all together, but they're like 2 pages each. And I wrote it that way because I wanted to get to a specific substance of a topic, remain in that topic, and make it so that the book is small enough that when you do want to read it, it slips easily into your briefcase or into your purse or into your back pocket even, because they're very thin. So that you can read them on the plane, you can read them as you're going to lunch, and it's not a big, bulky type of thing. So I talk about a whole bunch of different subjects on business and personal finance and mediation and being leaders. My current book is called You Can Lead. And I really believe that everybody can lead out there. They just need to have the basics of what they need to focus on. And so those are the types of books I read. So when I say I'm working on a new book, I'm working on a new mini book that will help people in some area of their life. Remember, I have been talking to you a lot about defaults, especially in the commercial real estate area. And we're starting to see more and more of that. So this morning I thought that I would give you kind of an example of what's happening right now. And it's happening in Texas, where a company is literally defaulting on their real estate, and they are hotels. And that is a scary thing. So a Dallas firm is expecting to hand back keys to 19 hotels, including 2 in Plano, Texas. The Plano properties are among the portfolio that could have required a pay down of $255 million and $80 million in capital spending. But they can't do it because, one, the value of those properties are now upside down, and they can't get the funding or investors to get involved in that. So there is a Dallas-based Ashford Hospitality, Trust Inc. expects to return 19 hotels to lenders in cities including Plano, Las Vegas, and Atlanta, declining to pour more cash into the properties, which are part of the $982 million mortgage pool that missed a payment deadline in June. So these are companies, and they're not just these companies here in Texas and Atlanta and in Georgia and places like that, but this is happening all over the United States, where people are handing back the keys to the property because it has very low cash flow to support the payment on the interest or the payment on those loans. They said that keeping the hotels would have required a pay down of about $255 million to extend the financing and $80 million in capital expenditures through 2025. Ashford Trust said in a statement on Friday that equity in the property is already negative based on comparable sales and brokers' opinion of value, according to their statement. The hotel portfolio in default includes 2 North Texas properties, Courtyard Plano Legacy Park, and Residence Inn Plano. At this time, it appears that the most likely outcome will be a consensual transfer of these hotels to the prospective lenders. They're going to give them back. Take the keys out of their pocket and give it to the lender because they're not able They're not able to keep these things funded. And that is a situation that we have to watch not only on a company like this that owns hotel properties, but also those individuals or companies, I should say, that are going to not be able to meet their obligations. We're seeing it in Los Angeles. We're seeing it in Las Vegas. We're seeing it in New York. We're seeing it all over the United States. Now, when I talk about this, I want you to put this into perspective, because when the economists out there are talking about the economy and how good the economy is doing, they're only looking at a small smidgen of the economy. They're not looking at the defaults. They're not looking at the auto loan defaults. They're not looking at the repossession of these cars and what they're sitting there doing. And individuals are not able to meet these big payments. And if you look at the car industry at the moment, they're unable to move their cars because they are so expensive and they've got so many dealer add-ons that, like, a Jeep Wrangler is now up into $70,000. A Jeep Cherokee is up into $70,000 and sometimes even higher. So we have a situation here where there is a broader picture of what's going on in this nation. And this broader picture affects you and I. Will we be able to go out and get that car? No, probably not, because the financing industry have become very tight with the money that they lend out. So we're going to have issues. You and I are going to have to keep our cars running as much as we possibly can by getting them just repaired. Because I'm telling you right now, I cannot afford, and nor will I ever pay $70,000+ on a Jeep, or $115,000 on a pickup truck from Ford. I just cannot do it. I need a new car at the moment, but I'm not doing it. One of the other issues is there was an article that said top U.S. banks on the verge of loan loss disaster. Now this scares me because this goes right along with what we just talked about on commercial property. So top U.S. banks on the verge of a loan loss disaster, and that's not good news. So the top U.S. banks are bracing for a significant increase in loan losses, the biggest since the pandemic started. This is due to rising interest rates and the impact of inflation on borrowers. An estimated $5 billion has been written off due to defaulted loans in quarter 2 of 2023, nearly double from a year ago. So we have a very tough time at the moment where the banks are saying, hey, we're in trouble. We have got loans that are defaulting. We have had to write off several $1 billion in loans because they all defaulted. Americans are no longer able to pay on their loans. It's gotten out of hand. Now, those of you who went out and bought a new car during the pandemic and are now paying $1,000 on a car, you're nuts. You're absolutely nuts. You did not spend your money wisely. So you're letting them go back. And if you look at the auto auctions, it is really a bad situation because there are cars coming in from Wells Fargo Bank and from other lenders, and these cars are not in very good shape because the lenders did not keep them up. It's $1,000 a month. They couldn't afford to keep them up because that car payment eliminated all the cash flow that they could have used to keep their engines up, to put oil in there, to do body work that needed to be done. But no, they couldn't do it because their auto expense, their auto loan was out of control. So people are defaulting on the loans, and it's going back to the bank, and the bank is putting them out to auction, and that's how it goes. And some of those cars are just sitting there. They try to put them back into the auction, but they can't get the prices that they need, so it goes back the next week or the next month. So as we look at this bigger picture, we have a problem. We have a problem with banks having to take back properties from individuals and take back cars and take back houses because they're unable to afford them any longer. Now, you hear economists saying, "Oh, we have a good economy." No, the American, you and I, the economy that we live in, it's not good. If you look at the corporate economy, fine. They've laid off a tremendous amount of people. They've slimmed down their budgets. They're trying to survive. But you and I, who are limited to the amount of funds, we are the ones that are suffering. We are the ones who can no longer afford to pay our mortgage, that can't afford to pay our car loans, that can't do this. And now we are seeing it in the corporate markets too, where they have real estate and they're having to take the key out of their pocket and turn the property back to the lender. That is a situation we don't want to be in, but we are. And so when you hear economists talk, they're not including that in their thought process. Not even there. Even though it's a big chunk of change that's going to affect this economy and affect the banking industry, they just ignore it because they want to talk about jobs. They want to talk about, and by the way, that jobs report last week was a weak report. It went down in the number of jobs. Went down. And the month before that, which was May, went down. They had to adjust it downward. So I don't see any good news in the jobs report. It's good they provided 200,000 jobs, but that's not the amount of that's not the number that we want to see. We want to see a much higher number than that. But we're not going to see it. We're going to see a further downward number on those jobs being created. So what's happening now is that the U.S. banks see surge. They see this huge surge in loan losses. So what do? Well, you and I have got to be good stewards of our money. We've got to continue doing that. Because this economic situation that we're in, where we are still being faced with inflation, we are still being faced with a possible job loss, we're still being faced with banking issues that will affect all of us. So you and I have got to manage our money very well. We have got to stick within our budgets. We've got to look at our budgets on a monthly basis or weekly basis. And if you guys are married out there, do it together because you've got to understand what money is coming in and what money is going out and what money that you can save. I am encouraged that I'm seeing that savings is going slightly up on Americans, but that's because no one is buying anything. They've learned that they need to save money. They need to conserve their money. So we still have an economic problem, so what I'm trying to say without stumbling all over myself is that this is going to last for quite some time because our economy still is not strong enough. We can see corporate numbers doing good stuff. We can see other various issues that is good news, but there's a broader picture here besides just that limited amount of information that we look at or that economists look at. We have a banking issue at the moment that we have to keep our eyes on, and that means that you and I are going to have to keep our eyes even more focused on our own personal budgets. Listen, if you would like to sit down with me confidentially and go over business issues, you can make an appointment with me online at www.lodge-co.com. And if you would like to send me a business question, you can do so. I love business questions. You can send it to thebusinessadvisor at gmail.com. That's Z with a zebra, okay? Everybody go out and have a great Monday. It's going to be a good day. I can feel it. But be focused on your own personal financial needs. Talk with you soon. Bye-bye.